The newsday continues here on One News Now Business. I am Diego Castro. Here are the biggest stories on the economic and corporate fronts. The Bangko Sentral ng Pilipinas is likely to adjust its full-year inflation forecast due to the recent rise in global oil prices. During a Senate committee hearing, BSP Deputy Governor Francisco Daquila said he will present a revised inflation outlook to the Monetary Board. BSP's current estimates see inflation settling at 5.4% this year. They project that it will then ease to 2.9% in 2024 before settling to 3.2% in 2025. To curb inflation, the Monetary Board has raised borrowing costs by 425 basis points from May last year to last March before pausing its rates. Analysts expect the Monetary Board to continue with its policy rate pause, which will be decided at 3 p.m. today. More analysts lowered their economic growth forecasts following the country's dismal second quarter print. HSBC Global Research expects a 4.8% gross domestic product growth this year. This is from their previous 5.3% forecast. Meanwhile, Nomura Global Markets Research also slashed their GDP growth projection to 5.2% from 5.5%. A Bloomberg survey also showed that analysts see the Philippine economy expanding by a meager 4.8% in the third quarter, while the average growth for 2023 is pegged at 5.3%. Economic managers say the country must grow by at least 6.6% in the second half of the year to achieve their target of at least 6%. However, one analyst told One News that it might be too little, too late to reach that target.
The government would have to review its assumptions for the coming year. Might be too late an effort.
Okay.
We have to probably temper our expectations for this year.
Okay.
But maybe gun for more aggressively higher growth next year.
Here to tell us about her economic growth outlook, we have with us on the show Domini Velasquez, Chief Economist of China Banking Corporation. Good morning, Domini. Thank you very much for joining us this morning. Now let's get right to it. Do you think the BSP will extend its pause in their Monetary Board meeting this afternoon?
Well, for us, likely they'll extend their pause. We think 425 basis points cumulatively is enough. We've also seen the effect in the latest GDP print, right? But we also think that even if they pause, Governor Remolona would be very hawkish. They'd warn that they can always hike interest rates if they think inflation is going up, moving up, inflationary expectations are moving up. And also if we do see a large peso depreciation, that it becomes inflationary again.
Yes, and speaking of inflation, the BSP says it's likely to adjust its forecast. What's your outlook on inflation?
We do agree. We've seen recent increases in prices of last month vegetables, so that's been continuing this month also because of that typhoon. Rice prices have increased not just domestically but globally, and of course oil prices. Previously our forecast was a little bit higher than BSP's at 5.6%. Now our emerging forecast is already at 5.8%. One important thing to note is that in August we think the inflation will actually be a little bit higher than July's inflation.
Okay. Second quarter GDP, it disappointed at 4.3%. What is your growth projections in the third quarter and the second half? Many economists that we've spoken to these last few days are saying it's unlikely that we can reach our 6% target. What's your take on this? Do you agree?
Yes, we do agree. We've also revised down our full year GDP forecast to 5.2%. Of course, we saw that government underspending in Q2. Even if the government sort of catches up by end of Q3 and Q4, we do think it's not going to push up GDP for the second half to 6.6%, maybe around the high 5.5 to 6% for Q3 and Q4. Largely because, the government's budget for 2023 was just 5.5% higher than 2022.
Okay. Yeah,
So
yeah.
nominally that's actually a contraction, right? If they expect a 6% growth. So it's not that much also as compared to 2022. We do think that growth, government spending will push up growth in 2024 because 2024's budget is 9.5% higher than this year.
Well, to achieve the best case scenario possible, what else can the government do to boost growth in the second half?
For us, of course, government spending is constrained by the GAA. We think for the BSP, the RRR cut is still in the picture. We do think they can do that once inflation has settled down, maybe Q4 at the earliest of this year. So that will actually boost your spending. You'll have more money in the economy.
Well, we'll definitely keep in touch for more updates. Thank you very much for joining us this morning, Domini Velasquez, Chief Economist of China Banking Corporation. We'll be back with more stories after the break. Keep it here on One News. You're still watching One News Now. I'm Diego Castro. Finance Secretary Ben Jokno says failure to reform the military pension system would likely turn the country's investment grade rating to junk. The finance chief notes that military pension system is, quote, not a real pension system, as there are no contributors. Pension for uniformed personnel are appropriated annually from the government budget. Jokno says if the Philippines rating is downgraded to BB plus and below, because of this, it would be harder for the government to borrow and finance the national budget. The House Ad Hoc Committee approved on Tuesday a consolidated bill that would require uniformed personnel to contribute to the pension fund. With the soaring oil prices, the LTFRB is set to distribute before the end of the month the fuel subsidy for some 1.3 million public utility vehicle drivers and operators. Those with modern jeepneys and UV Express units are set to receive fuel subsidies worth 10,000 pesos each. Drivers of traditional jeepneys, taxis, shuttle services, and transport network vehicle services have been allotted 6,500 pesos each. Meanwhile, delivery riders and tricycle drivers are set to receive subsidies worth 1,200 pesos and 1,000 pesos respectively. Meanwhile, another fare hike petition is expected to be filed next week. Pasang Mazda will bat for a 1 peso minimum fare hike for jeepneys. Operators of buses, taxis, and other passenger vehicles are also expected to ask for an increase in fares. The board also says it would have to set aside the request for a rush hour fee to focus on a different petition for a 2 peso fare hike.
Huwag na yung surge fee. Ang hirap kasi ng pag-compute nun. My initial suggestion is, isang amount na lang for 24 hours, yun na yun. It's a permanent increase, not dependent on a length of time.
Still on transportation, business tycoon Manny Villar is making his foray into rail operations as he reveals plans to extend the LRT-1 to the south, particularly his planned 3,500-hectare Villar City. Villar, who is the country's richest man based on Forbes' individual count, submits an unsolicited proposal to extend the LRT-1 further southward to Cavite. The tycoon says he is also willing to take over the construction of the last 3 stations included in the proposed LRT-1 extension project. The project is currently handled by the Light Rail Manila Corporation, or LRMC, a venture between Metro Pacific Investments, Ayala Corporation, and Macquarie Infrastructure. However, construction of the extension's last 3 stations, located between Las Piñas and Cavite, has been hounded by right-of-way issues. Villar says he could take over the construction of the last 3 stations without these right-of-way issues. He said he is also in talks with LRMC to add 7 more stations in Cavite to bring the railway system even closer to Tagaytay. And those are the top business stories of the hour. I'm Diego Castro. Join us again at 2 p.m. We are One News. The FIBA World Cup starts August 24. Support Gilas. Support Team Pilipinas. Watch. Buy tickets to the biggest sports event of the year.